Hello and a very warm welcome to Rajya Sabha Television. I'm your host Frank Pereira. Now, the Reserve Bank Governor Ranjan held repo rate steady at 6.75% in his monetary policy announcement today. The status quo on repo rate comes amid a pickup in economic growth, the recent uptick in retail inflation and the prospects of a rate hike in the US. On this edition of The Big Picture, we'll analyze the RBI governor's announcement, the GDP data released on Monday, and which direction the Indian economy is headed in. To talk about this, I have with me right here, with me on the program, Renu Kohli, former staff member, RBI and International Monetary Fund, SP Sharma, Chief Economist, PhD, Chamber of Commerce and Industry, senior journalist Priya Ranjan and we'll also be joined by Ajay, former Secretary, Ministry of Commerce and Industry. Thank you so much for being with me on the program. Renu, I'd like to start with you, of course, and ask you, around the world, we've seen that the economies have slowed down and have gone into a slump. But, the figures released or the announcement made yesterday very clearly showed that the Indian GDP grew at 7.4% in the term July to September 2015. These are good signs, aren't they?
It is indeed a good sign, and in a relative sense, amongst the emerging market countries, India stands out. It definitely is growing faster than the rest of the EMs, particularly if you look at Brazil and Russia. Much of the slowdown in emerging markets is coming from them, followed by China. There is also a divergence in the global growth trends, which is that the euro area and the US and including Japan are growing, whereas the emerging market economies are slowing down. So in that sense, yes, it's good. In an absolute sense, whether it's good enough or not is a question open for discussion. I just want to flag here that the 7.4% that we see is also, in real terms, it is quite significantly impacted by the GDP deflator. Now that, as we know, to convert nominal growth rates into real growth rates, you have to apply or you have to adjust for inflation. And in this case, in the July-September quarter, the wholesale prices, or rather producer prices, contracted quite severely, minus 4.5% on average. And about 60% of the overall aggregate GDP deflator consists of the wholesale prices. So in a sense, what we are also seeing is the nominal GDP, which is slowed down very sharply to about gross value added has slowed down to 5.2% in contrast to the rise in the real GDP. So some bit of that growth to an extent is an illusion because it comes from deflationary pressures which are coming from the producer prices.
Interesting that you raised this point and talked about illusion. That's something that we'll talk about just a little ahead in the program. But before that, SP Sharma, is India's growth story back on track, and are we going to see an upward curve?
I have very good observations about the Indian economy. It's not only the growth rate which is increasing at the rate of 7.4%, but India's presence in the global economic scenario is also increasing. Like global GDP, you see the earlier share was only 1.7% post-Lehman in 9-10. Now it is around 2.7% and is anticipated to increase at the level of 3% by 2020. So India's presence at the global arena is also increasing with so many reforms at the domestic front. And second, the revival of manufacturing sector, that is very, very important for the industry sentiments. As we have posted 9.3% growth rate in the manufacturing sector, that indicate that government's various policy reforms like Make in India are also becoming visible. With the advent of reforms, now we are growing in the manufacturing sector and electricity sector also. A lot of reforms are happening in the electricity sector. That is also one part of the ease of doing business. So 4 factors of production like land, labor, capital and entrepreneurship are getting pace, but still there are a lot of things which government has to undertake in the coming times, like land acquisition is a major problematic area for the industry sector. Second is the uniform labor laws, which industry is expecting since long. and third is the reforms in the company law, which is not in sync with the MSME sector. So I believe the reforms which have been implemented during the last 18 months and which are announced are showing visible results, and in the coming times we look forward for a good growth in the coming times also.
Indeed, we are all looking for good growth, and everyone's looking towards India as well at the moment, hoping that the growth continues. Let me also introduce on the program right now Ajay, former Secretary, Ministry of Commerce and Industry. He's joined us as well. Thank you so much for being with us on the program. But before I go to Ajay, let me quickly get a reaction from Priya Ranjan Dash as well. We've spoken about several of these things, but there are several sectors that are not performing and have not performed to their potential. So, but what is it that has driven this growth of 7.4% really?
No, as Dr. Renu Kohli has mentioned, this is a very weak recovery that we have seen. And, much of it is, like she said, is attributable to the GDP deflector. But, for instance, if you look at the manufacturing sector growth that's been given out over 9%, that's not borne out by the IAP or the industrial production data that you've had. So, be as it may be, what comes out today in the Reserve Bank of India Governor's statement, if you look at it, are quite a few worrisome factors. Number one is that demand remains weak, and it is especially so in rural India. And as you know, the ground situation in rural India is quite depressing, to say the least. Farmers' incomes have been down because of no real increase in MSP, as one factor just to mention. And the rural sector wage increase, wage growth has been declining actually. So looking at that, the manufacturing sector and industry faces a demand problem. So the upsurge or the slight the increase that we saw came out of basically urban demand, that too in specific sectors. So that is one. Number two is this very concern, especially Reserve Bank of India has about the very weak balance sheets of the banks. That they are saddled with non-performing assets or bad loans.
27% in the last 1 year.
Yes, 39 of those listed banks are saddled with 3.5 lakh rupees, lakh crore rupees
yes.
of bad debt. About 4.5% of the lending. Now that being the case, the Reserve Bank, of course, is now emphasizing that they should engage in a cleanup act and accomplish it, a total cleanup, by March 17.
Raghuram Rajan, Ajay, has been very cautious as far as the repo rate is concerned, and he's shown that same kind of caution today as well. What immediate steps do you believe need to be taken to try and put some of these things that Priya Ranjan Dash is raising on track?
I think we need to worry about the 8 core industries, about the data for which, for the month of October, also got released yesterday simultaneously with
yes.
the GDP data. And these 8 industries, which form about 38% of the manufacturing sector, have all slowed down. And they all happen to be the key industries: oil and gas,
yes,
coal, the electricity, fertilizers. I think these are the sinews of growth. We need to be worried about how to strengthen these. Steel. Alongside the data for infrastructure, which is slightly derived here because they have used the demand for cement, that slowed down. And it basically infrastructure where cement gets used in large quantities is highways and ports, which is, as you know, infrastructure means future growth.
Yes.
I think we need to be worried about this. These are symptoms, but the causes for it, as has been mentioned, is one, investment cycle hasn't got revived. So far, it's the government consumption expenditure which has probably driven the higher manufacturing growth during this last one quarter. But for growth and for Reserve Bank to be optimistic about playing with the rates, etc., they need to have much more solid base, which means, do we see more private sector investment coming in?
Indeed.
Is the capital formation by government picking up, or is it only the government expenditure? Because expenditure doesn't necessarily translate into capital formation and the cycle of growth being revived. How is the demand picking up in the economy as a whole? Government consumption expenditure will go up even higher. Or because of the government pay commission report, which is 23% increase across the line, that's the middle, so-called middle class of India. From post-January, their demand will go up.
Indeed.
How much of it will translate into investment is we need to be worried about. And that's what I'm a little cautious in saying things have moved better this quarter than in the previous, but that does not inspire enough confidence for any prudent banker to be playing around with macroeconomic prime interest rates, macroeconomic setup, including the prime rates of the economy.
Renu Kohli, we've raised several concerns at the moment over the last 10 minutes or so. And if you look at GDP ultimately is a theoretical construct. So looking at it from that point of view, would you believe that the 7.4% growth that we've seen in the quarter July to September 2015 as believable?
Well, I wouldn't cast any doubt or aspersion upon the statistics. There have been concerns ever since the new series was introduced, primarily because yesterday's 4.7% was bumped up to, rose to 6.9%, the share of manufacturing rose, and that of services went down, and so on. So, these are issues, but nobody has really questioned the methodology because that is given up to international benchmarks. And I guess any new series when introduced, and particularly for an aggregate variable like that of GDP, will take some time to stabilize, as this one will no doubt do. So I don't think that there is a lot of suspicion, though, in many segments, in many quarters about the statistics. But I guess the direction of momentum or whatever is being captured. In particular, what is the problem is that the high growth rates that are being reflected by the new series at the moment do not align very well or correspond to the yesterday's leading indicators like bank credit growth, IIP, and so on. So there is a lot of confusion. And well, I guess that's the only way to look at it.
Ajay,
for the time, we have what we have, and that's what we have to make do with it.
Indeed.
One astonishing figure in the GDP data which has been released yesterday is about the agriculture sector.
Indeed. 2% growth.
2.1%.
Yes.
And after two successive droughts. Last year, it was 1.9%. Now we find it's 2.1%. And there's one more year of drought. I'm wondering, I'm saying I'm not casting aspersions. The methodology is probably the same. But in agriculture, as we all know, there's a very high degree of approximation. And the firm data about agriculture output actually comes 2 seasons later, not even.
Yes,
indeed. We'll get to know 2 years later or a year and a half later what it was. So that, to my mind, could have influenced, though the weightage of agriculture is decreasing, but the fact that it's higher than what everybody expects, the rural demand is not there, and the corroborative data to show a higher agriculture output, that is an issue I wanted to flag.
Indeed. Yes, Priya, you also wanted to say something.
Another area of worry,
if I may just add to this.
Yeah, sure. Please go ahead.
Yeah, this growth to Mr. Dua's comment, let me just compliment with a little bit of input from my side, which is that what the CSO has explained, and it did so even earlier in the earlier GDP releases, which is that the value added component in the segment of agriculture, which relates to horticulture production, like things like fruits, flowers, vegetables, and I think livestock as well. The value added component in such items, production of such items is quite high, and apparently that's where this comes from. But as he said, we will know the exact production or output only after a substantial lag.
Yes, indeed. Yeah, go ahead, Priya. You were making a point.
Yes, I was drawing attention to the inflation scenario, and that being another reason as to why he's not, basically two reasons for why the policy rates haven't been touched by the Reserve Bank of India today. One, of course, is that the banks have not transmitted whatever rate cuts that in policy rates that the Reserve Bank has attempted. The Reserve Bank this year has done 125 basis point cut, but the banks have done 50, 60 basis point cut only. So there is a gap that remains for the banks to do it, and the banks can't do it because of the earlier problem that I pointed out, that their balance sheets are saddled with bad debts, and also the cost of funds for the banks do not allow them to set their base rates lower in accordance with the decline that is happening in the policy rate. So the second point, of course, is the inflation scenario, although is not looking too good, because even the non-food, non-fuel inflation has been picking up. So that's because several of the services in CPI, in the consumer price index, education services, transport, housing, all kinds of services have become costly. So that is one. And the food inflation, we've seen in October and September also, things like dal prices, pulses prices, they contributed to that inflation. And like Mr. Dua was pointed out, that the agricultural production, which is, took 2 years of consecutive drought, and yet it is showing. But so the food inflation scenario also, it could, unless it is very well managed, the food policy management is good, then there is a danger that is lurking there as well. So the primary two reasons, I would say, why he's been cautious and not gone ahead with a further cut in policy rate.
But could he have tinkered with the repo rate a little bit, SP Sharma? Maybe, a few points, maybe 25 basis points, if not 50.
We were expecting around 50 basis point cut in the repo rate, because a lot of things are improving. Inflation is already in the negative trajectory, around -4%. So there is a lot of room to reduce the repo rate. But still, because of global factors like expectations of rate hike by the US Fed, so these are the apprehensions. That's why RBI is not taking call to reduce further the repo rate. But like the agriculture sector, we were discussing the agriculture sector, that why if the monsoon behavior is not good, why the agriculture sector is showing good growth at 2%. I would like to submit that now monsoon behavior is no longer related to the agriculture production. You can check last 10 years data. When monsoon is weak, then agriculture is showing the good results and good growth numbers also, because the allied sector is increasing its share. Like milk production is very, very high in India and growing at a higher rate because of people demand for the protein contained items. And second is the other inclusion of the vegetables and other things that Madam Renu Kohli already mentioned. And other things like Punjab, Haryana, and this northern belt is not dependent on the monsoon behavior. They have their own arrangements also, like irrigation facilities and.
So are you saying that there might not be a problem in a year or two?
Yes. Now the irrigation facilities are increasing, and we are now not much dependent on the monsoon behavior.
Okay.
And third factor,
I saw Mr. Dua shaking his head and, not agreeing with you. But let him make his point, and then I'll come back and you can rebut what he has to say. Yeah.
No, I'm not really disagreeing with what Mr. Sharma has said so eloquently. Fact of the matter is our economy, agro-economy, is still 75% rain dependent. At 26% only perennially assured, it's very difficult to jump to a conclusion that we are no longer, our agriculture output is no longer dependent upon the vagaries of nature. It'll take us another 50 years, I'm sorry to say, to come to that stage, at least 5 decades, because in the last 5 decades, we've only progressed from 8% to 26%.
Yes.
So, pardon my pointing that out. Fact of the matter is the area under Kharif, which went for sowing, was certainly higher because the rains came earlier this year, if you recall.
Yes.
Farmers got quite excited. The area which otherwise may have remained fallow, that was also brought under cultivation. But when the rains were required later on, and roughly in Kharif, as you know, most crops have a 3-week cycle of irrigation. The last 2 cycles were virtually skipped, and that has affected output considerably. The Kharif output is just being harvested. We don't know the data as yet, but there is an expectation that there may be a production less production.
And in all likelihood, it could be like
yes,
that. Because
5 to 7% less than last year. The data which has been released in the GDP data, that's up to September.
Yes.
By then, most production does not come into the market. So it will be Q3 which will be really showing us the impact of the rain missing out at the time when the crops needed it. Then, Rabi crop. Rabi may not be the main crop in the country, but in certain states it is.
Talking about Q3, I want to go to Ms. Kohli and talk to her about Q3 because, Arun Jaitley, the finance minister, has said that we can expect a growth of GDP growth of 7.3% in Q3. Is that achievable? Is that something that we can achieve?
In Q3, you mean to say the October-December quarter?
Yes.
That's right.
Well, I mean, in the first half of this financial year, we have seen average GDP growth has been 7.2%. Now, the government has been saying that they expect growth to be in the range of 7.5 to 8%. And so, by arithmetical construction, in the second half, remaining half of the year, we should be seeing 8% growth each quarter for them to, reach somewhere in the midpoint range, around 7.7% or 7.65%. But having said that, about 7.3%, in the third quarter, I haven't really looked or done any kind of estimations. But we do need to see that the full impact of agriculture may be felt in this, because in the first half of the year, we often reflect the projections of the previous year's season. And that's the way agriculture has been done. Agriculture estimates are rated. Then there is IIP. There's not much which is known about these services, but PMI is showing there's some bit of pickup in export orders. So we might well see 7.3, but in any case, then that would be a decline in momentum as compared to the previous quarter. If we had, in second quarter, if we had 7.4%, then we have a subsiding. Yes, one more point.
Very quickly, please.
Which is that September, October, we had Diwali sales and we had the festive season. And we have to see whether car sales, etc., which are driven festival-related spending, whether that sustains or subsides.
Indeed, festival season has taken place, and we've seen that the sales have indeed gone up during the festival season or so. The car manufacturers and other electronic goods manufacturers claim. But very quickly, because I'm completely out of time, gentlemen, in 10 or 15 seconds each, please, your closing comments, starting with you, Mr. Sharma.
We are anticipating a growth at around 7.5% for the current financial year, and for the next year, we are anticipating at around 8% because of various reforms, implementation of various reforms at the ground level, because reforms are not yet implemented at the ground level.
Okay,
This 7.4% is not a result of all the reforms, and result of reforms will reflect in the coming times.
See, it's indicative of the fact that Reserve Bank of India has maintained its growth outlook for the current year at 7.4%. So you've had average first half is 7.2. So the other half is not going to be very different, 7.4. The danger, of course, is, there has been some crowding in of private investment. There's some, it's the investment cycle hasn't turned, but there has been. But because of the public investment picking up. But what Mr. Dua pointed out, the sword that is hanging is the pay commission. So if it is 1 lakh crore of extra spending this year, then whether
that's going to be a burden.
If you keep your budget deficit at the targeted level, then you'll have to withdraw that much from out of the investment.
Indeed.
Actually to
Ajay, do have closing comments from you, please.
I think the private sector role, government sector, we can anticipate. It's still uncertain whether they will really join the investment cycle. If the bank credit is going to be tightened, and looks like the way the nationalized banks are currently reeling under the NPAs, they would not get much support from there. And that's going to impact there, even if in some sectors like automobile related, etc., expansion was possible, that may or may not occur. To that extent, demand, basically urban demand, we may get I'm even saying 7.5% rate of growth is in the fourth quarter possible, but then the average will be only 7.3%.
Indeed.
But
on that note, we'll have to call it a wrap on this edition of The Big Picture, because we're completely out of time and we have another telecast on the other side. Thank you so much, Renu, Kohli, SP Sharma, Ajay Dua and Priya Ranjan Dash for joining us on the program. That's all the time we have. Thank you so much for watching.